there's a lot of people who are against shorts, primarily long. I love a big short position against something I'm in favor of. That's a position that has to be bought. In some investments, by the way, silver related, often Pan American Silver and the Silver Standard in particular, we delivered quasi-religious experiences to the short community. And I suspect that if people end up being too short PSLV, that they could experience just exactly that kind of religious experience. There's nothing in the world worse.
You've heard the headlines. Gold recently hit a record high, leaping over $170 in just over a week. But what if we told you that the real story isn't gold's rise, but what's quietly building beneath it? Veteran investor Rick Rule is sending a clear message. While gold has had its moment, silver is the one to watch. And according to Rule, we are standing on the edge of a rare, generational opportunity. Silver has always been a shadow player, more volatile, more overlooked than gold. But history tells us something important. Every time gold spikes, silver doesn't just follow, it explodes. In 1980 and again in 2011, gold's rise laid the foundation for silver to rocket from under $10 to nearly $50 in record time. Rick Rule believes that same pattern is playing out again. Gold has made its move. Now, silver is cooling, tightening, waiting for the right moment to launch. And when it does, it won't be a slow crawl. It will be fast, aggressive, and impossible to chase.
And frankly, I see the attitude in all three countries of the exploitation of resources for the benefit of the state rather than for the benefit of the private parties who seek to do it. One trend that we're seeing in the mining business, not just gold, but really across the mining business, is the very rapid increase of social rents on mining. Government royalties, government taxes, government off-site concessions, which is to say the expenditure by companies on infrastructure off the mine site that would normally be the responsibility of government. Remember that governments exist to transfer, which means they have to steal that which they transfer. Mines are fixed targets and capital-intensive targets. They're an extremely attractive target for governments. The Mexican government would rather that they stole from the Mexican miners. The American government would rather that they stole from the miners, and the Canadian government would rather that they stole from the miners. The idea that there would be a common unity among thieves, which is to say the Mexican, the American, the Canadian government, seems very unlikely to me, having observed these same governments now for over 60 years.
Steve P. asks, does Rick believe we will switch to a digital currency?
Over time, yes. What it will look like, I have no idea. My hope would be that we graduate to a plethora of digital currencies. I'm a consumer of currencies. I use the Australian dollar, the New Zealand dollar, the American dollar, the Canadian dollar, the Chilean peso. And to the extent that there's a whole bunch of smart geeks in some lab trying to design a better currency for me, I'm all for it. My suspicion is that the distributed ledger eventually will be a technology that's adopted really throughout commerce. I think, as an example, that home titles ultimately will be recorded and transferred on a digital ledger. And there's no reason why currencies shouldn't do that too. And there's no particular reason I can think of, other than the greed and larceny of host governments, that any issuer has a monopoly on a medium of exchange or store of value. And I would like, as an example myself, to be able to transact in fractional gold and silver. When I go to Starbucks to buy a cup of coffee, I'd like to have my account debited and their account credited for a fraction of a gram of gold in exchange for my coffee in the morning. And I think my experience has been more of a speculative instrument than gold. And silver tends to outperform gold towards the middle or the end of a precious metals bull market. In my experience, precious metals bull markets are led by gold because the first buyer is the fear buyer. Precious metals oscillates between greed and fear, with the fear buyer kicking off the move, and then the momentum established by the fear buyer bringing the greed buyer in. Silver, because I suspect of its lower unit cost, when the generalist money comes down into the precious metals space, that money eventually causes silver to outperform gold. And by the way, When the silver bull market starts, you're not going to need Rick Rule to tell you it's here. You're not going to see a move from 33 to 34. When silver moves, it really, truly moves. But normally that move takes a while to establish itself. And normally what establishes it is momentum in gold. I don't think that the Basel III Accords were particularly important to the increase in the price of gold, because the Basel III banking accords primarily affected private sector banks. It being gold was made a tier one asset for banks like Barclays, Bank of America, Citicorp, Daiichi Kangyo, those types of global banks. The buyers have been foreign central banks. I do believe that the Basel III Accords will be important to the gold price going forward when the private sector steps up to the extent that the public sector has in the gold trade. Other aspects of the Basel III banking accord probably indirectly will benefit gold too, in the sense that although the rules around gold were made less restrictive, there were other rules around the characterization of bank reserves. And in particular, the differentiation in reserves against debt instruments that were held for sale versus held to maturity. Accords that allow banks to extend and pretend around time losses in their portfolios that I think will destabilize the economy a bit, particularly in crisis. And as a consequence,
silver has spent recent weeks stabilizing below a significant resistance level of $34 an ounce. Every effort to break through has been thwarted by sellers. However, this is not a sign of weakness, but rather indicative of classic pre-breakout behavior. Technical analysts are paying close attention. A bullish hammer pattern recently appeared at 33.10, signaling a reversal. The relative strength index shows an upward trend as buyers gradually gain control. As the price becomes more compressed, the potential breakout could be explosive. If silver surpasses $34, subsequent targets are $34.50, then $35.
Philosophically take issue with. The owner of the water has the right to determine whether it's used for a data center or whether it's used for irrigation. And it's nobody else's business. If they want to express their satisfaction or dissatisfaction, they should buy the land and they should buy the attendant water and use the water any way they choose. The idea that somebody determines for me what the highest and best use of my assets are in service for their architecture for the future of mankind is something that tells me that that person wants to enslave me. In terms of the original question, I have, over the course of my career, participated in the acquisition of lots of kinds of farmland. Earlier on, certainly vineyard land and irrigated almond land in California, but much more recently, although I don't do it actively anymore, I do it passively, which just means that I invest through farmland management companies. I have invested mostly in very high quality, well-watered farmland in the Mississippi Basin, and to a lesser extent in the coastal valleys of California, Oregon, and Washington. For me, rural land acquisition is all about the income that it generates through the cycle. So timberland, high quality irrigated land, it's all about the rents that I can take off the land over time. Yes, I want to own that land for 50 years. But I don't want to be particularly concerned about the impact of taxes on the rest of my portfolio as a consequence of holding land that is in the near term economically unproductive. Yes, I want to own the land. Yes, I want to own the water. And yes, I want it to pay current rents. I guess that's the whole answer. The idea that I would buy raw land in anticipation merely of price escalation is something that's not of interest to me. I want to...
Beyond these, double-digit percentage gains might unfold within weeks. Segment 3. Macro forces are driving silver higher. This situation goes beyond analysis of charts and patterns. The macroeconomic landscape is changing rapidly. The Federal Reserve is anticipated to lower rates this year, with markets already accounting for a 71 basis point cut. This translates to increased liquidity, a higher risk of inflation, and a weaker US dollar. Simultaneously, geopolitical tensions are escalating. Renewed military conflicts in the Middle East, trade tensions between the US and China, Oil supply disruptions in the Red Sea and growing global distrust towards central banks are occurring. Investors are gravitating toward hard assets. While gold has seen influxes, silver remains undervalued, but not for much longer. Segment 4. An impending supply crisis. Many investors are overlooking the strain on silver supply. Mining output is decreasing annually. Exploration has diminished, with major mining companies holding back due to years of price suppression, hindering investment in silver projects. Meanwhile, demand is climbing. Silver is vital for solar panels, electric vehicles, 5G infrastructure, and the green energy movement. It's not merely a store of value, but an essential industrial component. Unlike gold, silver is consumed. Once used in cars or solar cells, it's permanently utilized. The result? A structural supply deficit persists for the fourth consecutive year. Inventories are dwindling, and as investor interest turns to silver, the market may be forced to reprice sharply. Segment 5. The gold-to-silver ratio signals danger. A key metric tracked by Rick Rule is the gold-to-silver ratio. Historically, when this ratio exceeds 80, a significant rally for silver follows. Currently, the ratio significantly surpasses that level. In 2020, when it reached a record 125, silver's value nearly tripled. Similar conditions in 1980 and 2011 preceded some of silver's greatest surges. This isn't merely a technical anomaly, it's a recognized indicator of extreme imbalance. When such imbalance is correct, silver doesn't just equalize, it surpasses. Segment 6, the market remains unresponsive. Despite these indicators, skepticism prevails among institutional investors. A key focus point is PSLV, the Sprott Physical Silver Trust, which faces heavy shorting by those who doubt silver's prospects. Rick Rule finds this situation humorous. To him, a substantial short position is simply one that must eventually be repurchased. When silver moves against shorts, the adjustment is often intense. Rule has observed this before in Pan American Silver, Silver Standard, and other silver equities. The consequences? Short squeezes that deliver overwhelming experiences for those who shorted. Segment 7. Strategic planning beyond trading. Rule doesn't merely invest in silver, he also considers his exit strategy from the start. If silver reaches $50 within 2 years, his attention shifts to capital reallocation. What is the most effective use of that capital after tax considerations? Could it be invested in farmland, revenue-generating real estate, or undervalued stocks? Rule continually questions, what is the best use of my money today? Segment 8. A final caution. Here's the conclusion. Gold has already broken through resistance levels. Silver is quietly gaining momentum. Technical indicators are active. Macro conditions are aligning, supply is shrinking, demand is increasing, and investor sentiment remains skeptical. According to Rick Rule, this combination is ideal. Should silver exceed $34, the move could be swift, aggressive, and definitive. Waiting for confirmation might mean it's too late, as the market will have already shifted. This pattern has been seen before, and Rule believes we're on the brink of witnessing it again. This could represent one of the most notable asymmetric opportunities of the decade. The question for investors is straightforward. Will you be chasing the movement after it begins or riding it from the outset? This is your briefing from Economy Express. Stay informed, stay ahead, and always conduct your own research before making investment choices. I'm your host. We'll return soon with more astute insight for keen minds.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.